cannot hold it, you don't own it.
Central banks have been buying gold like crazy.
Value your wealth in ounces versus depreciating currencies.
Welcome to The Real Money Show. My name is Jeremy Wiseman. I'm joined here by Jerry Correia. Right now, the price of silver has dropped below $70 an ounce. Gold is trading near the $4,000 handle. And you would think that that's it for the bull market in precious metals. But today, Jerry, we've got three stories to discuss that tell a completely different tale. One is politically based. What do you do when there's political chaos? Another is the industrial demand side in the precious metal sector. And lastly, we want to talk a little bit of Fed talk. Hopefully our eyes won't glaze over. I think this time we'll be able to tell a good story on what's happening with the Federal Reserve. So let's jump in, but first, how are you doing? How was the last couple of weeks for you?
Last couple of weeks, well, first of all, I'm doing very well. It's been very exciting to filter through all of the noise and headlines, and that's exactly what I've been doing, is filtering through. This is what we try to do here at Guildhall, and with the Real Money Show, focus on, the bigger picture, the macro story, which always has to come down to, for me at least, is the currency story, debauching of the currency. Nothing is new under the sun with regards to this type of loose Keynesian monetary policies of just stimulus, kicking the can down the road. And now we're trying to realize, where did all that money go? So it's a fun thing of connecting the dots. And I got to tell you, the fundamentals for precious metals keep me tuned in, because those fundamentals, the common four that we have been discussing, like a broken record for the past since 2008 with the Real Money Show, and Guildhall's going on to its 25th year. So congratulations to you and the family, and to us. We're here to help people to understand and why it's necessary to convert out of fiat currency. But the fundamentals remain: currency debasement, which is inflationary, supply and demand concerns, and economics 101, and then plus you have the geopolitical changes in landscaping and de-dollarization. But these four fundamentals, we've added a few more fundamentals, and it's causing a lot of excitement. This is not just any pullback in metal. This is a setup for the next bull run that is ahead of us. It's around the corner, guys.
I think just to stay on the current action in the precious metals, I often get counterintuitively excited about them, because every time I've seen them happen in the past, it's what's usually been followed up with it is that the market takes off pretty quick. You get this kind of like last little bit of a washout. Although this feels like a retest, we had some really great gains through October, November, December, and January, and we saw some all-time highs in January. So it makes sense to consolidate. But that said, I remember 2008. 2008, we had a big washout in the metals, and then within that time, it was within 3 years. It took from October 2008, and then all of a sudden, 2010, it was really running, right?
Right, I remember that.
It was a long consolidation. 2020, silver went from 18 down to 11. That was a crazy washout. And what's interesting about those, by the way, is there's this zone where premiums are key within a certain dollar range. If it goes too far below on silver, premiums go up. So you're not getting a deal anymore. And if it goes too high, premiums go up again, and this is all supply demand based.
Yeah.
But 2020, the market went from 18 down to 11, and then by August, and that was March. Yeah. And by August, we'd hit $30 silver.
Right.
So we had doubled in value in silver. So, and there's been other examples along the way. Those are two big ones that I've experienced. And I get a little excited because I know, okay, this is going to be a washout. So let's move on to some of these stories to show why we think this is far from over and actually an exciting time to buy on the dip, get into the market for the first time if you haven't done so. So this week, Doug Ford was on an American news network talking about Fortress North America. I don't know if you caught the clip. Personally, full disclosure, I didn't watch it. I saw that he was there. I saw what he discussed. I saw the quotes. And my first reaction...
Did it have to do with beer or alcohol?
No,
Pretty much everything he talks about.
No, but I did make some comments on X about that.
Okay.
You know, I don't think the majority of winemakers in California are Republican.
Right.
That's number one. So I don't know who you're hurting on that one, right? And I'm pretty sure all bourbon drinkers are not Republicans either. I'm pretty sure that it's one of these things that is on both sides. So. No, but I was looking at that and I was thinking, you know, when your opponents are using your own premise, they've lost, right? When they're basically, in this case, what conservatives have been talking about is let's work together. How can we help you be a big success?
Yes.
Right? You want to build your industry. How can we help you? What do you need? Right? What can we, like, do you need water? We got water. You need lumber? We got lumber. You need gold? We got gold. Like what, potash? What do you need?
Let's all grow
we can
together.
help you. So, but the thing is ultimately the fact that they're using these lines, but there's actually nothing behind them. They're still not negotiating.
No,
right?
They cannot.
They still haven't gotten to the table. They're still holding retaliatory, you know, holding back the alcohol, as you mentioned.
Mm-hmm.
It's not actually doing anything. It's just talk. But
Correct.
The Overton window is moving. They are now moving towards what the conservatives are saying. And by the way, I told my sister this the other day, Jerry, and we're going to get to the gold and why this is important.
It all leads to gold.
But I said, I'm actually like, I'm not some crazed leftist or crazed right wing, whatever.
Extremist.
I said, I'm actually like a liberal from 1995.
That's
which was just kind
a
of like
right-wing extremist for today.
Which is now a right wing crazy, whatever it is. But look, the thing is that they backed off on retaliatory tariffs. They haven't made a deal. And whether or not they're either not good at negotiating or the worst case, they're trying to engineer another crisis that they can blame so that they can lead towards another vote and say, it's all his fault. It's all Trump's fault that we couldn't get a deal done, right? Like, are they trying to engineer another crisis? But either way, the fact is that they're not trying to make deals, and it's only getting worse for Canadians. They've either made it worse by shooting us in the foot with retaliatory tariffs, or they're subsidizing, using our money to subsidize. And what's happening? Well, these companies are either folding or they're going to the U.S. anyway. And so you're stuck with policies that you can't affect. Mm-hmm. This is why you need to hold physical gold and silver.
This is where it comes in.
There's no counterparty risk. You are outside the system. It's undigitized. They can't touch it. And ultimately, these are bad policies that lead to, lo and behold, the dollar's tanking in Canada. And what's the number one thing that gold and silver do is hedge against a devaluing currency. So as a Canadian, I think it's just very important to hold actual real money, physical gold and silver, to hedge against bad policy.
It's insanity.
And the fact that you can't affect those policies either.
It's an absolute insanity. When we are the only G7 nation now in a recession, the only G7 nation who has not been able to come to the table to discuss these tariffs, retaliatory tariffs, because all of the roads lead to, you know, the discussion of fentanyl, unfortunately, here in Canada, and why this has not been dealt with. From the grassroots all the way to the top. The money is being followed and tracked, but gold and people are looking for an escape hatch because they cannot change the policies. They can't, do anything to change the income tax or the corporate taxes here in Canada. So they're leaving, unfortunately. The industrious, and over the last 3 years, our industrious clients, our entrepreneurs have decided to leave. Rightfully so. You have that right to do so. But as investors, if our fight is here in Canada, which we are, and we're going to be here, we are in Canada. But the main idea would be to follow what countries have done with their money. Over the last few years, it was years of sanctions. Why have we seen central banks replacing U.S. treasuries? This comes from a report from the European Central Bank last week that gold, physical gold ownership has replaced U.S. treasuries as the number one reserve asset amounting to up to 36,000 tons, which is the amount that was in the reserves under Bretton Woods. We're all leading there, but this is the main idea. When you have countries experiencing sanctions, we have had accounts frozen. Money is just digital. The reason why countries need these reserves is because it provides that hedge, that escape hatch, escape out of fiat currencies, out of digital banking systems, and it's
bad policy.
Or bad policy. So when we see gold and silver moving down, it is very important to know it's not physical. When you see the statistics that gold year over year is being acquired and accumulated en masse from India, China, Poland.
Georgia
leading.
in May bought $100 million worth
In the U.S. Was that the country, Georgia?
The country, Georgia.
Okay, gotcha.
And China accumulated again in May a massive amount. So let's move on to the next topic. So the next topic we wanted to discuss today is bringing in more of the industrial side. So you see silver coming down, but does that mean demand for silver has disappeared? Absolutely not. Here's one example of a story I wanted to discuss, which is U.S. energy. They right now have 100 gigawatts of power through nuclear, and they want to bring it up to 400 gigawatts of nuclear. So if you're going to run your AI data centers and anything else that comes beyond that, as you know, they're just getting started.
Maybe
in terms of manufacturing.
Another Manhattan project, maybe.
I hope not.
No.
But they want to increase that. Of course, if you're going to build a major nuclear facility, there's 56,000 ounces of silver that's going to be used in that, which is close to 2 tons that gets locked up in that facility forever, right? Maybe not completely forever, but for a very, very long time. Right. And while that doesn't necessarily compete with the type of industry use that might be going into electric cars or the electric batteries themselves, it's just one example of a growth industry for silver. Mm-hmm. And that's just in the United States. What if Germany decides that they want to go back to nuclear, right? What if the Iran situation is resolved? Iran is in control by its people. Mm-hmm. And they decide that they want nuclear facilities for energy. And they say, America, we're happy to open our borders. You help build it. I'm sure America would love that. Mm-hmm. But how many ounces of silver would be used around the world to create nuclear energy, safe nuclear energy? And are they called microsites? Smaller sites, right?
You're right.
So this is just one example of where silver is going to be used. It's going to be locked up for a very long time. And it's just another one of those growth industries.
Absolutely. It's a lot of things going on surrounding energy and a decoupling away from just oil and the petrodollar. It's linked. When you have the collateral of petro being removed or the dependency on just petro, if you can create other forms and actually use proven forms of energy and diversify away from just oil, you reduce your dependency, you naturally reduce inflation on oil. The central bank will be freed from fighting inflation, and they can go ahead and get back to what they do best and kick the can down the print, which is what they have to do. But remember the deal that was done last year in December with Japan when they signed the $500 billion nuclear deal with the US. They were investing in nuclear. So the trends are already moving very fast, very rapidly. And it does have to do with energy and national security.
National security, because if you're going to build these things, where are you going to get the silver from?
Where are you going to get it?
So that's where they put silver on the critical mineral list. Now you have to secure a line of product coming into the country, but you also have to secure the refining capacity, which is also quite small in the United States. There's backups. I mean, I've heard that people are still waiting for product that they bought in January, which is terrible. That is not any of our clients, by the way. They did not wait, but some competitors, they waited. But you need that physical product and you need the refining capacity, which they're also building. Correct. And I could only imagine how much silver goes into building of a refinery itself. Right. And the technology that goes into that.
You need silver to build a silver mine.
Silver to refine silver.
Oh my gosh.
And then as well, maybe just maybe that's just the tip of the iceberg, because they've also put forth the Silver Act. And if the Silver Act is something that even gets close to being put through, and I think Besant said that they can work towards it even though it's not been passed, it's just been put forth. But what the Silver Act is about is putting exchanges in every time zone across America. And that would also mean having refining capacity across all those time zones. So you could start to see this industry could be breaking out in a big, big way. So it's not just nuclear, but also all the different industries that it could be involved in. And if you're the type of person that, invests in the picks and axes and shovels of it all, this is a great place to consider having physical silver, because it's going to be used industrially, not to mention what happens when gold goes to 8,000.
Correct.
How much more appealing silver becomes at $150, $200 an ounce, because gold's trading at 8,000.
That's right. See, when you buy physical, you're buying the sure bet. It's tough to pick the right winner, which is the right one. Gold and silver, when you buy physical, you're not dealing with an ETF or one of these ETPs or futures or options on futures, things that we don't do. These are just financials. And this is a movement away from financials, which have, through the central banking system, created fractional reserve banking. There's always a fraction of your collateral in the bank that is left over, and they use the your entire balance sheet to finance things. And this is the way the system has been built against us savers. So when you're buying the physical, you're not only diversifying away, but you're now making your portfolio, if it is for your portfolio investing, but you're now creating a relevant reserve, because gold and silver are going to be introduced very quickly and speedily. These Clarity Acts, Genius Act, Silver Act, Project Forge being globalized with the BIS. This is all going to happen very quickly. And this is the meshing of technology with resources, with the treasury, all culminating together. And this has to happen, because again, if we go back to monetary policy and to grow these things, there's no on switch for silver supply. There's 6-year structural deficits out of silver. There's not enough silver in supply to quell the demand. We need more and more silver for AI and ChatGPT. And the forecast is, right now, there's a deficit of about 820 million ounces of silver deficit since 2021. By 2030, it could be 1.5 billion in deficit.
Is it possible then a lot of these type of engineered pullbacks, or whether it's margin calls or it's engineered, however you want to, it's a guessing game right now why the prices come down. Is it that people need liquidity? Is it that there's margin calls? Is it that, they're taking profits and it kind of just becomes a self-fulfilling prophecy on the way down? But does it help industry, or those that need to supply industry, with trying to get people to cough up the metal as well? Is that part of it?
Well, I don't think many people or entities, because silver is a critical mineral and a national security issue, that they're allowed to sell the physical silver. It's a national security mineral that it needs to be accumulated and acquired at any cost at all times, just like lithium.
But would it at all costs, meaning let's get it off of retail?
If you purchase your physical on margin, then you would be open to those margin call risks. And this is why the yields are spiking. It is costing more. It's when the yields are spiking, that's flashing zero liquidity.
Okay, hold on. We'll get to the yields.
Get into the yields?
All right. First, let's talk about what we do at Guildhall Wealth, which is we help clients to hold physical metals strategically. We definitely believe in crawl, walk, run. If you've never acquired physical gold and silver, one of the best ways to do it is to just start small, get that 1 ounce of gold in your pocket, see what it's like to acquire it for the first time. We often find that a big part of the paradigm shift is that clients go from the concept of investing to asset ownership. And asset ownership has different types of costs involved. When you think about real estate, you think about land transfer, paying the agent, the lawyer fees, and then there's ongoing costs. There's a lot less ongoing costs with precious metals, but it's asset ownership. And as well, when you think about investing, there's your 10, 11 sectors. Owning an asset is outside of that, right? Even if real estate is one of those sectors, gold is the hedge against it all. It's the insurance policy. So at Guildhall, we help people to own it strategically. Maybe you've moved beyond holding some silver maples and some 1 ounce bars of gold, but you're thinking, okay, so should I have it in my TFSA or my Lira account? What's the best way to go about it? And we talk with our clients, we figure out what they're going to need it for, what their timelines are, and help them to guide them to the best strategy of holding precious metals. Some people will say, hey, I want to do all gold. And we might discuss it and say, yeah, have you considered a little bit of, or sometimes they come in and they say, I want all silver. And you say, listen, it's $1 million. You might want to focus on the gold, which is less volatile, as an example, easier to store, those sorts of things. So we really help people strategically in the market. So give us a call and we can have a discussion and see what might be the best route for you. Yeah, let's talk about the yields, Jerry. So this is a story about what can trigger the market for gold to go much, much higher.
Yeah, absolutely.
Right now, the story is basically the Fed is going to hold rates for longer.
That is the story.
Okay. Is that story well-founded?
No. I mean, they will. We're talking about the Federal Reserve. Their two mandates is to keep inflation down and employment up, and they've done a horrible job of doing this to the point where.
Do they get credit for the recent jobs report?
I don't even know. Maybe. I mean, it could probably.
Did they do anything to create those jobs?
I would say it's more of the Commerce Department and Department of the Treasury and lowering taxes ultimately, and inspiring creativity. But what we're seeing with the bond yields, they're seeing that issue once again, it's flaring up. The bond yields indicate that, number one, there is no liquidity in the market. And number two, it costs to service the debt. And we know the U.S. is around $39 trillion, not to mention consumer debt, corporate debt. Every entity from the top down feels that stress. So when you see the bond yields flashing like they did in 2008, it's a big warning signal. And this indicates that the rates are too high. Why are they high? The Fed is trapped. They're keeping it high to posture and to
they're keeping
the rates higher for longer to fight this inflation that they ever won a round in this fight? They've always been beat up and battered. What have they done throughout the decades? When push comes to shove, when the Fed is trapped, and they are totally trapped between trying to look like they're fighting inflation by keeping rates higher, but it's hurting everything else. We've seen margin calls over the last 5 months. We've even seen gold and silver margin calls. Private capital not being able to take deliveries or withdraw money and redeem your own money out of an institution. Imagine that. This is the issue with fractional reserve systems. But what this means is when the Fed has to decide whether it's to fight inflation or to control the system and I guess a dismantling of the problem, they will cut rates. They will say, forget inflation. We need to cut rates. We need to stimulus, but this is more and more of the same thing. Kicking the can down the road, currency debauchery, but to offset, we're also seeing the offsets. Defending against what David Hunter said, in order to fund the unfunded liabilities and losses on these banks' balance sheets, because there's a statistic that came out. The U.S. right now is spending 43% of all its personal in corporate income taxes. Everything that it's bringing in, 40% of that is going towards paying the interest on all of the debt. You're not growing.
So you need interest rates to come down to renegotiate all the debts, and lower those payments,
lower the cost,
which would help you down the road.
Right. Which Canadians won't see. We have the 5-year mortgages. The U.S. has the 30 to 50-year mortgages. But it's all about handling it and sustaining the credibility of the U.S. dollar. It's the U.S. dollar will weaken. People will begin to distrust the dollar more. But there are things that are moving in the right direction, which keeps us very optimistic. When we look about these acts that were passed, the Clarity Act, Genius Act. Yeah. If we look at the European Central Bank report recently, the number one buyer of gold on the list, surpassing India, China, Poland, The number one entity was Tether. Tether, the very crypto company that the US Treasury Department was very interested in it with the Genius Act, making sure things are one-to-one, not a fraction. We're going back to one-to-one. And then this is going towards why we're very excited.
It sounds to me that the Federal Reserve or the US with the Federal Reserve needs to take a step back to take a step forward. That fighting inflation isn't going to help you if everything is being sacrificed, like growth.
Correct.
You need to let inflation run a little bit. You need to lock in lower rates for these loans, et cetera, the debt, and then figure out how you're going to bring back validity or respect back to the dollar, because everyone's flooding to gold, which has become a massive reserve asset because people are saying, well, first of all, it's backed by nothing. Yeah. There's no trust. Are you going to weaponize it?
Freeze it?
You know, all of these things. So pick the item off the menu. But ultimately, if they lower the rates, I think this is where you were getting.
Yes.
If you lower the rates, the obvious reaction to that is inflation. And when you lower the rates, gold is going to take off.
It's the currency debasement. This is it. This is the key takeaway for why precious metals are going to spike. And this is the reason why my call in the very short period of time, short term, 3-6 months, I'm calling 260, 270 US dollars per ounce. That's, in my opinion, pretty conservative, just factoring in just monetary policy. For the last 3 rate cut cycles in the US, going back 25 years, silver has averaged 413% right after the rate cut cycle. It happens immediately, especially this time around. If it's an emergency rate cut, I expect an explosion in this market, because gold and silver simply are just inversely correlated to the US dollar. And if you're cutting rates, if you're cutting interest, you're cutting interest on the US dollar.
Do you think, though, that part of sort of a golden parachute, because I'm thinking it too. You say, oh, you're going to drop rates. It means you're going to let inflation run. It means you're going to let the dollar completely tank. But there is a golden parachute there, which is you could do something to mitigate it by saying, yeah, but we're also going to launch this gold-backed treasury at the same time, and bring validity back to the dollar. Maybe not going back to a gold standard proper, but trying to tie some sort of connection back to it, which would definitely mitigate this idea of, you're going to lower rates and then the dollar's going to fall forever. Either scenario, gold wins, I think.
Either way, gold wins, but this is not just your regular kicking the can down the road scenario that we've seen over and over again. It's a different playbook. It's involving gold. Petrodollar is being decoupled. We're moving in a different direction on the 250th quincentennial of the United States independence from 1776. This is all in line with the book Good as Gold by Judy Shelton. She's back into the fray. She was on the Squawk Box 2 weeks ago, and this is where the roads lead. All roads lead to supporting the US dollar. It's not about just US dollar strength and keeping the US dollar world's reserve currency. So it's about fairness, mercantilism, and credibility in the US dollar.
It also seems like lowering interest rates, if that were to happen, whether it's an emergency or they plan it, that it would be a way for gold to rocket higher under that type of narrative. But what you're actually really doing is just revaluing it.
That's
right. You're letting it revalue, because in those moments, gold tends to really play catch up, and silver could play some crazy catch up. And a lot of major banks are forecasting for these things, and a lot of analysts are forecasting these things. You've got, is it Bank of America that's still calling for like 6,000 this year and potentially $300 silver. You've got Michael Oliver calling for 200 to 300. Matthew Piepenberg from Matterhorn Asset Management calling for up to 300 in this bull run. I don't know if that's going to happen this year. I don't fully agree with you there, Jerry, but eventually it's going to get there. Eventually we're in triple-digit silver, becomes a new reality, and we go from there.
It's exciting times.
Speaking of getting there, we've arrived at the end. If you want to get involved in the physical gold and silver market, please give us a call. We'll walk you through how to hold physical gold and silver direct or in a depository account for ease of liquidity, or even as part of your registered account where it's fully allocated, segregated. You have ease of liquidity, and you even have access to go and personally audit your holdings. Because if you can't hold it, you don't own it.
You don't own it.
Thank you, Jerry. And thank you, everyone, for joining us here on The Real Money Show. Catch The Real Money Show here on Rebel News Saturdays at 1 p.m. If you've missed an episode, you can also catch The Real Money Show on our YouTube channel at Guildhall Wealth, or follow us on Spotify and follow us on Twitter as well. The number again, 1-877-8-SILVER, the website, guildhallwealth.com. Learn how to have physical gold and silver in your portfolio, and we look forward to speaking with you soon.